Hello and welcome to this week's Australian Stock Market Report. This week we'll look at why the stock market is overreacting to the coronavirus, then get into the market so I can share with you my thoughts on the Australian stock market and where it's heading, along with answering all of your questions and looking at stocks for you. Hello, I'm Gillham, Chief Analyst at Wealth Within, and we're Australia's most trusted stock market educators. Now before we move on, thank you for showing your support for our channel and hitting that subscribe button. Now remember, as you click the subscribe button, click that bell on the right of it so you do keep up to date with our latest videos. Also remember to tune into our live Australian stock market show every Tuesday, 7 to 8 p.m. Australian Eastern Time. Now this is the show where you get to ask us, the stock market, education and trading experts, to look at your favourite stocks and answer all of your most burning questions. The one thing I know with absolute certainty is that the mood of the market overrides rationality, logic and fundamental value. This certainly rings true right now, as many companies have been oversold based on emotion rather than logic or fundamental value. Now I'm saying this because many companies have not changed their earnings forecasts, which means they do not foresee issues arising from the coronavirus. Given this, I see no reason to sell, as many of these companies will bounce back in the not too distant future. While the Australian market has taken a hit last week, this was due to the significant amount of negative news around the coronavirus, or in other words, the market was reacting to fear-mongering. In my mind, the big end of town is essentially manufacturing these falls, as they are the ones who benefit the most from the increased volatility. It is important to remember that the big fund managers conduct the majority of buying and selling in our market, and they know individuals overreact and make emotional decisions to market news, so they use these opportunities to their benefit. While I understand the coronavirus is a big concern for world health, what we're experiencing in the market right now is only a short-term emotional reaction to the news. And in the not too distant future, the coronavirus and what occurred in world markets will be a distant memory. You need to understand the mood of the market will dictate direction. And while the mood short term is bearish, the medium to longer term mood is still more bullish, and the medium term direction is up. So what were the best and worst performing sectors? Well, given the market is down, it's not surprising that all of the sectors fell last week. Utilities was the best performing sector, down just over 6%, whilst healthcare, materials were down just under 8%, and financials, they were down just over 9%. Now information technology was the hardest hit sector last week, down nearly 14%, with energy down just under 13%, and consumer discretionary just under 12%. Looking at the top 100 stocks, the best performers include A2 Milk, which was down just over 1% for the week. Cleanaway Waste Management was not far behind, with Bank of Queensland and AusNet Services down around 2.5%. The worst performers include Reliance Worldwide, that was down just over 27%. That was followed by Link Administration, down 26%, and Magellan Financial down over 22%. So what do I expect in the market moving forward? Well, let's get into the charts for our S&P All Ordinaries Index update for this week. We'll also answer your questions and look at the stocks that you've chosen for me.
Please remember that this report is an educational tool. While Wealth Within holds an Australian financial services licence, the information featured in this program is general in nature and therefore should not be relied upon. Before making any investment decisions, you should consult a licensed professional who can advise whether your investment decisions are appropriate for you. We hope that you enjoy this week's report.
Well, I know I've said it before that a week can be a long time in the market, and I think for a lot of you the week was not just a week, it felt like a whole month, the way the market fell away last week quite heavily. And it is quite interesting, and I mean we'll look at the chart in a second, but a lot of people, why I said the market was overreacting in the early part of my report is simply that's what I'm seeing is right now, because of the speed of information, with people having all the news in their palm of their hand, and this news just causes people to make decisions that not necessarily are benefiting them. And I do get a lot of people who just, as I said, believe in all the noise of the market that we talked about in some of our reports over the last month or two. But let's get stuck onto the chart and have a good look at it. Now on the screen, I've just got a weekly chart of the All Ordinaries Index. This is the same chart that I've been using for months. I know there's a couple I've been using, but this is the main one that I've been using for the last few months. And you can see I haven't changed a thing on this. If you go back to last week's recording, you'll see everything is there as exactly as it was the week before, except this bar, which is last week. And you can see there that has a 731 point range. Now that's a fantastically big range for our market. Our market normally doesn't do that sort of range. But if I put on my little tool here where I can see it, put my little tool here, you can see from the open to the close, the market fell, and I'll just change that to percent so you can see an actually percentage point. So percent, you can see it fell 10% last week. And that's a huge fall in a week for our market. Like you can't see 10% in a week, but we do need to get used to these times where the market is going to be a little bit more volatile and you're going to get bigger moves in shorter spaces of time. Because human psychology doesn't change. All that's happening at the moment is the speed of the information coming through is causing that psychology to have mass mood go a lot faster. And that's, as I said, with people with their mobile phones and everything being able to buy and sell using their mobile phones. And so the big entertainers, as I said, are using that speed of information to manipulate the market a hell of a lot further. But let's go back onto the chart and have a bit of a look here. You can see this is right in the middle of my blue zone, which has been there for so long. And before Christmas, I said I did expect our market to peak somewhere mid-February to some sort of mid-March, maybe a little bit longer than that, and then come down into a low. That's exactly what it's doing, and it's not something that's abnormal to me. The speed is a little bit abnormal, but it doesn't mean we're going to continue to crash or the market is crashing. I certainly don't think our market's crashing. I just think it's coming down into its low. If you go back over the history of our market right through to 2009, if we go, I'll scroll right back here to that 2009 low, which was the GFC low. Look at these big moves through here, and one right through here into December 2018. If you look at that, and I'm going to talk a bit about this on our live show tomorrow night, but during this period of time, I think it was about 7 different times in 10 years, our market fell more than 10%. And, right now, it's just normal market movements to me. In terms of the actual distance it's fallen, I'm not talking about the speed. The speed is a little bit abnormal. I'm not too worried about it. To me, again, I would think the market might even bounce this week. This is Monday morning. I haven't even seen the market open yet. It's before market open. But it would not surprise me if our market traded up this week and closed right back up into this sort of blue area here and retraced some. I'm not saying it's going to retrace all of it, but I would suggest it might bounce back up again. A lot of bottom pickers coming in, trying to pick up some stocks, but right now I don't see anything to worry about, and I really wouldn't worry unless the market went down to around that 63 or 6200 points, and then I would start to worry a little bit more. But I was expecting an 8 to 12% fall. We're down around 11% at the moment. It might go to 15%. We could even get to 20%, but I would think that would be the very edge of it. I think 15% might pull up if that's my thinking right now, but I'm prepared to be or change my opinion on that. But let's go and have a look at the questions we have from you, our listeners or our viewers, and see where we go to here. Now, the first question that we have today is from Jordan, who says, "Hey there, Jordan here. I'm 24 from New Zealand, but moving to Australia in 3 months." Well done, matey. Good to have you over here. Now, he says, want to get into investing in the Australian market, and he goes, which applications and brokers would you recommend? Now, applications and brokers, I would just stick with the banks. You're going to need a bank account in Australia, so just open an account with the bank. Or a broking account with the bank that you're using. There's a few good brokers, but they're all really good in Australia. Australian laws and regulations are very, very good. There's very few brokers I would stay away from. It was probably more of a bigger question in the 90s when I thought there was a few interesting brokers around in the 90s, but nowadays it's quite tight. But generally the big brokers, I mean, I bank with Macquarie, or some of my stuff with Macquarie, and I trade with Macquarie Bank as well. So, but all the banks have got a good one. Applications, that's a really interesting thing. And in terms of application, your broker gives you obviously the ability to trade on the marketplace. So applications, I'm not sure exactly what you're asking about here in terms of maybe software or whatever else. You really don't need that. It's really your broker will give you enough information for you if you're more of an investor. What I would suggest is really buying my book, which is really the comment, or your next comment. You said, also, Dale, any chance of making an ebook version of your book for sale? There's already one, matey. It's the US version. You can buy it on Amazon. There's an ebook version on Amazon. You just download it, put it on your Kindle or your iPad or whatever it is. It is already there. It's just me, exactly the same education information as in my Australian book. I'm just using the Dow stocks as my reference for the trading and everything else. So outside of that, everything is pretty much the same. So if you want an ebook, just download the US version of it. But welcome to Australia. As I said, just get on. As I said, when you open your bank account, also start setting up an online broking account with the same bank, because it's much easier for you. Now, the next question we got is from somebody called My Small Box, who says, can you please look at NHC? I'm down 30% since I bought it. Should I buy more since it's cheaper? The answer to that last question is absolutely positively not. Never, ever, ever buy more of a stock that you're already losing money on. So, but you actually don't say you're losing money. You just said I'm down 30% since. Oh no, I'm down 30% since I bought it. So that means you are losing 30%. That means you don't have stop losses, or you're not using them, and you should be using those. If you're not, just get my book, Accelerate Your Wealth, like the last person was talking about, and that will help you understand stop losses, how to use them, and when to enact them, etc. as well. But first thing is never, ever, ever buy more of something you're already losing money on. And I know they call it dollar cost averaging. Dollar cost averaging will make you broker from there. But let's have a look at NHC on the screen. And you can see here, this stock is just I can only say it's a DOG stock at this point in time. If I bring up the monthly chart, you'll see, if I put my little tool here on, from that high there down to the recent low, geez, it's driving me crazy, this little tool. It was always set on percent, and now it's set on price. So let me go there, 68.66%. It's fallen since this bar here back in March last year. So I'm not sure exactly why. It means you would have bought it somewhere in around here, maybe even around this bar here in September if you bought it more recently. Otherwise, you would have bought it somewhere way over here in this sort of area around 2017 to 2018. But right now, all I can see is this stock is heading south. If it breaks below that low there at $1.45, it's going to hit this low. If it gets through that, then it could go even further. But right now, I wouldn't be in this stock at this point in time with my money. Whatever you want to do is whatever you want to do. But first thing I'd say is get an education. Buy my book. It'll help you understand it a hell of a lot better. The next question we got is from Mark, and who says, hi Dale, could you look at FMG? Looking bullish, not sure for how much longer. I'm not sure why you're looking at FMG in terms of being bullish. I know Jan and I myself have said a few times in the last month or so that as of those sort of big miners, FMG was at least preferred one, because we thought it was a bit overheated and was about to come down. But he's saying it's looking bullish, not sure for how much longer. Just finished reading your book. Very good read, would recommend. Thanks, matey. So let's go and have a look at FMG and have a good look at see where it is and where it's going. Here's FMG, and here's the high here back in earlier January 24th, or the week ending the 24th of January. We've been down 1, 2, 3, 4 more weeks. I don't like it at the moment. I think it's got a lot further to fall. As I said, BHP and Rio, we do like a hell of a lot more than this stock, and you can see why. This thing was very, very, very bullish for quite some time. From that low there in September 2018, we're talking about 266%. So it is just coming down. It's right near that previous all-time high at 1315, and this one here is 1287. So this could be a huge big double top. I'm not suggesting it is at this point in time. A little bit too early to tell, but I would expect it might come down for 1 or 2 months. But right now, stay out of it. It's not a stock that I think is giving us a buy opportunity right now. But if it comes down to this sort of area around $8 to $9 and then finds some support, then I think it might be worth looking at that point in time. But again, right now it's just going down and retracing down into a normal market low that would normally do. So let's go and have a look at the next question. This one's from Gladiator, who says, Dale, when you get a chance, please go through WHC and NHF. I'm overweight on them. Would like to know your view on them. I'm not sure why you're saying you're overweight on them. Don't really articulate exactly what you're doing here, because sometimes overweight means that you've bought, let's say you've got 10 stocks in your portfolio and you put 10% in each, and then let's say 2 of them rise up very, very, very strongly, and then they start making up 20, or not just 20% of the total portfolio, but 40 or 50% of the total portfolio. Some people think that's overweight, and to me that's not overweight. That just means those 2 stocks have done very, very well. The other stocks are basically trailing behind those. That's not overweight in my book. What overweight means, if you have, let's say $10,000, instead of splitting it into 10 different stocks of 10%, you might put 50% of your money or 60% of your money in those 2 stocks. That's overweight in my book. That's a lot more high risk, because your capital is in less stocks, and that's really what it is. You might have 3 stocks, and if these are 70 or 80% of your portfolio, then you'd definitely be overweight. But again, you need to buy my book if you haven't. That'll help you understand balancing and weighting and looking at position sizing, so that you're in the portfolio, or your stocks in that portfolio, you've got enough in them so when they do move up, they do have a nice effect on your portfolio, but you don't have too much into them that if they do go down, they strip all your profit. So that balancing out of your position sizing is really, really critical. All too often I find people have way too small a position sizing in their stock, so when a stock does go up, well, it doesn't really have much of an effect, and they spread their money out over a lot more stocks. Only the other day I think I was talking to somebody who had 25 or 30 stocks in their portfolio, somewhere around there, and I said, why would you do that? Because basically what's going to happen is 1/3 are going up, 1/3 are going down, and 1/3 are doing nothing. They're just going sideways, and the ones going down are taking the money from the ones going up, because there's not a lot of money in any one of them. And you're better off having a little bit more concentrated portfolio. But let's go and have a look at the charts and look at WHC first, and I'll bring that up. That's bearish right now, so I'm not sure why you have it and how you've become overweight in it. This is a trading stock. Look at how volatile this stock is. If you're not a trader, an experienced trader, I would stay right out of this stock, because it really is one of those ones that it really suits traders. It's down 67.6%. It looks like it's got further to fall. My suggesting is you've probably bought it and you're losing money, and you bought too much of it based on speculation, because it's again, this is one of the ones we call like catching a falling knife, and you would have heard Janine and I talk about that many, many, many times on our live show. Our live Tuesday night show several times, that people think, I think it's cheap. They might have read something in the newspaper or the media saying, hey, look, it's fallen, it's over, it's really undervalued now, and people jump in and buy it. There's no reason to own this stock at this point in time, and there hasn't been a reason to own this stock for since somewhere in around this sort of area, around well over 12 months, around September 2018. So if you've bought in that time, then you need to tidy up your rules. Let's go and have a look at the last one you've got is NHF. And again, all I'm seeing is bearishness here and nothing. And right down back here to August last year, there's plenty of exit signs on this stock right back through here into August, September, October. If you've bought that more recently, again, that you need to really tighten up your rules, because at this point in time, it's broken below this low here, which suggests it is weak, and I don't have any good news for you, mate. I'd love to have some really great news for you, but it seems to me you don't have good rules about buying and selling. So at this point in time, hopefully you have a stop loss on those stocks and that you do enact those. Being overweight in them would suggest to me that you may have bought in thinking they were bottoming out and going to take off like a rocket. And if that was you, then again, I would seriously start looking at, if you haven't read my book, go and buy it, because it'll help you by stopping you making these sorts of decisions and getting into better stocks that are moving up, not ones like these that are moving down. But thanks anyway for sending in your question. I really do appreciate that. And thanks for watching until the end of this video again. So now if you have any questions like those people and you'd like me to answer them, just stick them below into the chat and I'll get to answering them next week. So you get typing. Now remember that here on this channel we do these market reports every single week on the Monday, and we do our live stream every Tuesday night, 7 to 8 p.m. That's where Janine and I pull stocks apart and give you our expert opinion. So also remember to hit that subscribe button now and click the bell on the right of it so that you know when we upload new videos. That's it for this week. I'm Dale Gillham. Goodbye, good luck and good trading.